Welcome to the new weekly outlook for this week. We're going to take a look at the fundamental side and then move on to the technical side where we are going to go over US30, GJ, UJ, and gold. So starting off with the fundamentals first, we have this article where we have the Treasury Secretary talking about where he's not too worried about the sell-off that happened last week in the equities. And when you continue down into the article, Trump is pretty much saying the same exact thing where he's not too worried about the stock market. And matter of fact, he's not even looking at the stock market either. But this article I thought was very helpful to understand why the sell-off happened in the equities last week. And a lot of this came from the investor concerns about the economic effects of Trump's tariffs, immigration, and cuts to the federal government policies and the steps that they were basically taking around that. On Friday, we did see that the equities bounced back a little bit, but continuing with the Asian session today, we saw a continuation of that investor concern. As we continue down into the article, we also see that there is the April 2nd deadline that is approaching, where Trump was earlier in the last few weeks or so, earlier this month and even last month, he was talking about the new countries and the new industries that he wants to place more tariffs on, and he was going to do that on April 2nd. So with that deadline approaching, there is a lot more concerns from the investor perspective, and also especially with the economic data points that we have been seeing last week with inflation and consumer confidence also dropping. There's a lot more concern from an investor perspective that there's going to be continued inflation effects on the long term, and also that there's going to be a lot more uncertainty in the markets. When we continue down, we see that we had inflation data coming out last week, and also those numbers pretty much maintaining around the same levels as the month prior, if not increasing just a little bit. But also in the second half of this article, it starts touching a little bit more about what are we expecting this week from the Fed. So the Fed is meeting this week. We are going to get central bank investment or interest rate news that's going to be coming out. And for the most part, the sentiment is that the Fed is going to maintain those high interest rates, but we are looking for more of the keywords around what kind of sentiment that the central bank officials will be setting up for investors. So more, terms and diction around we're going to maintain the interest rates. We are going to keep watching economic data points, especially with inflation, consumer confidence, employment data, etc., and that they're going to be ready to step in whenever necessary and look for any sort of optimism that they're going to be setting up for investors. So that takes us right into this next article, where the Fed is in a wait and see mode, and the investors basically want reassurance from the Fed and see what kind of steps are they going to be taking if inflation continues to increase over the coming months, especially what kind of rate reductions are we seeing for the remainder of the year. As we continue down into the second article, we see that, again, the expectation is that the Fed is going to leave the interest rate steady when they meet this week. And now traders are instead seeing that there are going to be high odds of 3 rate cuts this year, most likely beginning in June. But economists generally, they're expecting that there are definitely going to be 2 rate reductions this year overall. But this month, this meeting, the emphasis is going to be, again, more around statements that are going to be given by Powell around whether or not, we're expecting a better outlook. Is the Fed pretty much standing on standby and watching what's happening with the economy? And Powell already has mentioned in his previous statements earlier in the month as well, is that the Fed is pretty much just trying to see what is going to be the net effect of Trump's policies, and especially with these tariffs. And if there's going to be continued, inflation, then obviously the Fed is going to be maintaining those interest rates, but there are other ways that the Fed is able to combat that kind of problem. When we continue down, this is right here, balance sheet. So this is the next thing, another thing that the Fed can potentially do. So if they can't, cut interest rates or increase interest rates, but they're maintaining interest rates, another thing that they can do is manipulate or modify, would be the better word, their balance sheet. So now investors, and even on an institutional level, so when you're looking at investment banks, when you're looking at hedge funds, when you're looking at financial institutions in general, they're watching this Fed's balance sheet and looking for hints of whether or not they're going to continue to pause or further slow the speed at which the central bank is going to reduce its balance sheet, which basically just means quantitative tightening. Now, moving on to the next article, we have some geopolitical news, which is Trump orders military attacks in Yemen as a response to the Iranian-backed Houthi attack on vessels sailing through southern Red Sea. Overall, so far, the economic or the data points that we have for this is that there have been 31 people who were killed and at least 191 injured in the strikes between this. And Trump has stated that they're going to continue using overwhelming lethal force until they have achieved their objective. So what we are seeing when you're looking at all three of these articles, plus the economic data points that we have so far before we jump into Forex Factory, is that there's a lot of uncertainty from an investor perspective when it comes to the Trump's tariffs, when it comes to the policies that we're seeing in the US and the effects of that on a global level. But also when you're looking at the global economy overall, there's just a lot of uncertainty. Also, when you're looking in Europe, a lot of uncertainty around Germany and the new administration that has come in there. And also from a geopolitical level, you still have these continued attacks that are happening in the Middle East. So overall, we're investors. There's still very risk-off sentiment. They're still on the sidelines. You're still seeing that a lot of the profit taking has already happened, and it's continuing to happen from equities. And instead, we're starting to see the safe haven assets, currencies, commodities, all of that increasing more in value as investors are flocking over to that side a lot more. Now, when it comes to what kind of economic data points are we looking at this week, today we start off quite easy. As you can see, a lot of yellow and orange folders. Tomorrow, things pick up a little bit with the US core retail sales that are coming out. We're expecting that the previous was negative 0.4%, which means that the retail sales had dropped last month. We're expecting an increase of 0.3%. Core retail sales month over month, and then retail sales overall from a negative 0.9% up to 0.6%. So we're expecting an increase there. Continue down. Rest of your New York session should be quite easy, even Asian session as well. And going into London session should be a bit more easy. If you're trading GBP, JPY, or if you're trading Euro JPY, you might get a lot more volume in the market from the German economic sentiment, especially if you're trading any Euro pairs. This is going to be heavily impacting that. And we're expecting that the sentiment is going to increase more into optimism as well. Then in New York session, once again, if you're trading any Canadian pairs, this is what you want to watch out for. CPI data that's coming out, that's inflation in Canada. Rest of New York session should be quite easy. And then going into Asian session, you have interest rates coming out from Bank of Japan, maintaining at that 0.5%. And then the more important thing is, of course, going to be the press conference to see what kind of sentiment is being put out there. And the market will be reacting to the things that will be said at the press conference as well. Then the following day on Wednesday, you have interest rates coming out from the Fed. Once again, the expectation is that we're going to maintain those interest rates. But the more important thing is going to be the FOMC statement and also the press conference. So what kind of sentiment is Powell going to set up for investors and overall the market as well? And really, we're just looking for, again, those key statements along the lines of policies makers are watching the economic data. And the data is going to be inflation, consumer confidence, employment data, etc., and that they're ready to step in when necessary. Basically, provide optimism for investors. That's what the market is waiting for. Then going into Asian session, you have a Japanese bank holiday. So if you're trading any JPY pairs, you can expect a bit of a slowdown happening on Wednesday in Asian session. And if you're trading any Aussie pairs, you have employment data coming out there. On Thursday, you're going to have a lot more volume in London session with claimant count change coming out from GBP. And then also from Switzerland, you have the policy rate. So if you're trading any Swiss franc pairs, we're expecting a rate cut of 0.25%. Continue down, you also have interest rates coming out from Bank of Japan, maintaining those interest rates. That's what the expectation is. And then you also have around New York session, Bank of England Governor Bailey speaking, along with unemployment claims coming out from the US. So still employment data is very important for the Fed. And then we're closing out the week with core retail sales coming out from Canada. So that's the economic data points for this week. Now let's go ahead and move on to the technical side. So on the technical side for some of these pairs, I do have the main fundamentals that at least I'm watching out for this week, and overall macro fundamentals as well, such as the Trump tariffs, inflation, and then this week we have the Fed meeting, core retail sales, and unemployment claims that's going to be affecting this pair. So starting off with the weekly time frame, we are still in a very bullish momentum to the upside when you're looking at the overall structure. What we have is last week we made a massive bottom wick rejection down here. So we're going to do that 40,600 mark. And if you want, you can create a zone here as well. I'm just rounding it to whole numbers, just so it's a little bit easier when we drop down to lower time frames as well. One thing that I do want to mark off is going to be these top wick rejections that are being formed right here, these two top wick rejections. And that's pretty much where this new weekly candle is starting to form as well, right? So if you wanted to, you can bring it up a little bit more. Sits right on top of that wick rejection there, and that's where this candle started forming right off the bat. It's been bearish. So this is pretty much if price flips back up above that area, I know that this weekly candle is also going to be bullish. So I'm going to mark that off at 41,400. And if price flips, then we know that's bullish. It's pretty much in our direction to the upside if we're looking for any buying opportunities. If not, we know that the overall weekly candle is still bearish and we're looking for those continued sells to come back down, potentially into that 40,800 to 600 mark. And then for the remainder of the week, we also have that 41,900. So this is pretty much the point where this candle is either going to be bearish if it's below it or bullish if it's above it. If it's above it, then I'm working off what is the next level that we're headed up to, which is going to be that 41,900 mark. You drop down to the daily time frame. So on the daily time frame, it's still quite bullish. If you're looking at the overall structure, not much has changed here. So we haven't really broken structure here overall. This is your entire bullish structure. We tested structure, kept pushing back up, and we're still bullish here, right? So we haven't really created any lower highs or lower lows. If anything, we have just come back into previous areas of liquidity and bounced off of that. So last week we had that massive seller's pressure to the downside. So this is Monday's candle and kept pushing. Friday, that is the rebound that we were talking about on the fundamental side, a push back up, but still closing right at that 41,400 mark. And that's where we started forming this week, right? So today's candle, first candle, a little bit of a top wick, but coming right back down and still pushing. So when we're looking at the daily time frame, there's really nothing else that I would mark off that's quite special here. So instead, we're going to go down to the 4-hour time frame and take a look at what's happening here. So on the 4-hour time frame, once again, just checking to see if these levels check off, which they do. And then if anything, I'm going to create a zone right around here into this area. So that is the area where I'm seeing that there's some candle rejections, candle body closures, and then I'm just going to extend that out here just to see what price is doing in the most recent price action. So here we had the first low that created, price created, and then price pushed back up into that 41,900, rejected that, came back down, and as you can see, for a couple of 4-hour candles, we're kind of just hanging around here until this one on Thursday in New York session made a nice top wick and then a massive sell-off. And then after that, we started coming right back up. And this is where we closed out on Friday. And today, that's exactly where the first 4-hour candle closed. And then this new one started forming about an hour ago. So if we can clear below that, we know we're looking for sales to come back down into this area. If not, I know this is going to be my no trade zone, even for scalping opportunities, unless price can push back above that 41,400. And then we're looking for buys to the upside. So that's how I would narrow in. And then fundamental wise, once again, these are the main fundamentals that we're watching out for this week. Let's come down to GJ. So coming on to the weekly time frame, you have the claimant count change that's coming out this week. You also have Bank of England's interest rates that are coming out, and then Bank of Japan's interest rates as well. So this pair is going to be heavily affected by interest rate news this week. Now in the weekly time frame, I'm going to mark off the top wick rejection of the current weekly candle. For the most part, that's where we're seeing a lot of this rejection, a lot of these resistance being formed, which is right into that 192.6 mark. So if price can break that, we know that this weekly candle is also going to be bullish, and we can look for those continued buy opportunities to the upside, potentially coming around this 194.738 area. If not, and price keeps pushing back down, then we know that we have that seller's pressure. What I do want to mark off here is going to be this first key resistance. So in between here, you have a range of about 80 pips or so. So you can still catch some scalps opportunity here. If you're someone who catches, 10, 15, 20, 30 pips, there's definitely enough room for you to do that, regardless of whatever session that you're in. But if price breaks below that, then we know that we're coming right back down into this next area of support, which is 188,500. So these are my 3 key levels on a weekly time frame. Drop down to the daily. So on the daily time frame, we see that this is a very key area where you have price keeps coming back and taps into it, and then you see nice bullish momentum. We get a little bit of a retracement, and then that nice bullish momentum to break the previous highs. We come back, revisit into that area, and then once again here, that bullish momentum to the upside. Once again here, a bullish momentum. We consolidate here for a bit, and then we finally break out of it, kind of mimicking what has happened here. So as you can see, the similarities a little bit. And then same thing, we're kind of just hanging around here in that area, in that resistance zone. So this 188.5 is a very key level, clearly a very strong support with a lot of liquidity. And we're just trying to see if we can finally break past that 192,600. Price has struggled to break past that multiple times, right? And so we're just waiting for price to break that. And if it does, then we can mimic this momentum to the upside as price has done in the past. You come onto the 4-hour time frame, same thing. So anything in between, you're looking for scalping opportunities. For any longer term sells, I would want price to break below that 191.7 mark and then continue to the downside. First target being, of course, that wick fill. So it could start off as a scalp for about 23 pips or so. You're continuing all the way down for around 90 pips, 80 to 90 pips. And if price keeps dropping, then you're coming right back into this consolidation area here. So anywhere from around 170 pips to almost 230 pips or so. So another area of liquidity. That's what we're looking for if price doesn't have enough volume to keep breaking past these higher time frame levels. You come onto the 1-hour time frame, you have that previous consolidation, price kind of just taps into it. And once again, same thing here. So to highlight your consolidation, it's this area right here. So if I'm looking for any potential longer term trades, so like day trades or swing trades, I'm making sure that I'm waiting for price to break out of this, or you're doing a zone to zone trade. So I'm waiting for price to push up a little bit higher, reject that, and then come back down. That could be your zone to zone trade, or vice versa. You wait for price to come back down, tap into this, potentially into London session, or even going into New York session, and then you wait for it to push back up. I'm not really looking for a trade in the middle. That would be a quick scalp. So if I'm looking for a longer term trade for like a day trade or something like that, I'm looking for a quick zone to zone trade. Coming on to UJ, once again, the Fed meeting, the Trump tariff news, inflation news, core retail sales that's going to come out, and then unemployment claims. And then from the JPY side, it is Bank of Japan's interest rates. Looking at the weekly time frame, once again, quite bullish. We haven't really broken structure here. If anything, we are coming back and tapping into some of the key areas. So last week, we ended up holding onto a support here, which let's just call it 950, 147.950. We held on to support here. We're not really breaking the previous weekly highs just yet. So if anything, what I'm going to do is just mark that off, and anything in between is kind of a quick range. If price can break past that, then we're coming up to the upside somewhere around here. So around 15700 would be the ultimate target. If not, we're waiting for price to break that 147.95 and then continue down for a wick fill here on the weekly time frame to around 146.5 level. So let's go ahead and adjust this to 149.2. Come on to the daily time frame. So this, once again, happens to be a very key area where we see previous consolidation forming, a lot of wick rejections. So that tells you that there's a lot of liquidity. Anytime you want to check if an area is a level or a zone of liquidity, see what happens after price leaves that area or taps into it and then pushes in one direction or another. So here you had that nice seller's pressure to the downside. You had that rejection, push right back up. And around this area, we start to see that the volume dies down. And then you have a bit of a setup right here. So we're trying to see what happens with this daily candle. If it can break past that 149.2, then you have that buying opportunity to the upside to 150.7. So you have a pretty good range of around 150 pips that you can take advantage of. If not, and price is just simply rejecting that and pushing back down below this area. So you start off with a quick sell opportunity below the zone. So you want price to break that bearish wick right here on the daily time frame, come down for about 90 pips or so, and then a continuation down one level at a time to from 90 pips to almost 200 pips, 300 pips, and a continuation down from there. This is a higher time frame. So if you're looking for a trade here, just understand that's going to take a little bit longer for it to play out, especially if it's UJ. Now coming onto the 4-hour time frame, same thing. We're kind of holding on to a bit of a resistance area right here, and we're kind of rejecting that. So anything in between, quick scalp opportunities, you don't really have a day trade or a swing trade opportunity. If you're someone who's looking for a longer term trade, you wait for 149.200 to be broken, and you have your buys to the upside. Or if you're looking for sells, you wait for this entire zone here to be cleared out, that bottom wick here to be cleared out, and then you have those clean sells for about 90 pips to the downside. Let's come on to gold. So with gold, you have all these fundamentals from the US side, but you also have a lot of interest rates news that's coming out from Bank of England, Bank of Japan, etc. coming out this week. So a lot of fundamentals overall. So let's start off with the weekly time frame. We are really approaching that 3,000 mark. We have already actually rejected that last week. I don't doubt that price is going to tap into it once again or even surpass that. So you got that 3,000, let's say 7 mark right there. Last week, we rejected that. I'm going to mark off that previous resistance. We'll just call it 40, 29.40, and we have a bit of a range here. So there's really nothing to the left here because we are sitting at all-time highs, even for gold. But there's no doubt that with those increased tensions, even from a geopolitical level, that we're going to keep pushing up to 3,100. You come onto the daily time frame, and on the daily time frame, we see that on Friday, we closed out like a doji, even after tapping into that 3,000 mark. So what I really want to see is when I'm dropping down to lower time frames, if I'm going to look for any continued buys, I want to make sure that price isn't really breaking past, let's say, this 29.79 level. If I'm looking for any continued buys to the upside, or that's for scalps or day trades, or I'm waiting for price to break below that, so then we can look for sells for a deeper corrective move to come back down into that 29.40, almost 29.45 area or 50 area, right around here. Reject that and then keep pushing back up bullish. I come onto the 4-hour time frame after tapping into that all-time high level of 3,000 almost. Let's go ahead and adjust that. So after tapping into that 3,000 mark, price rejected that, came back down, and that's kind of the area that we're consolidating out at. So I'm looking at the 3,000 mark because I definitely do think that if price can break past that, you have enough scalp opportunity to come back and catch a quick scalp to come back up into that almost 3,005 or 3,007 mark, and then continue that up for a better buying opportunity when it comes to higher time frames up to that 3,100 mark. I think that is a very optimal entry for a buy opportunity to the upside. When you come back onto the 4-hour or even the 1-hour time frame, you're starting to see a lot more consolidation. So with that bullish momentum to the upside, I do think that price can consolidate, maybe get a bit of a deeper corrective pullback and then continue pushing back up. But 3,100 area is what I'm really targeting for the most part for gold when it comes to my longer term trade opportunities as well. But if you're someone who's looking for scalps or even day trade opportunities, I do think you have a good opportunity of a zone to zone trade here. So if price can reject into that 3,000 mark once again and push back down, you have a quick sell there. If you're someone who's trading in Asian session today or even London session, you have sells coming back down into 29.79 as well. So you have a quick zone to zone opportunity, maybe even going into New York session after price pulls back down, you have a good buying opportunity up to the 3,000 mark. Any optimal longer term swing trade opportunities, again, above that 3,000 or below that 29.79. So that's pretty much it for this week's weekly outlook. As always, if you guys have any questions, feel free to reach out to me on Instagram at SharmaFX or just comment below and I'll try to get back to your questions. Make sure you guys are using proper risk management and really not over risking or over trading. You have a lot of fundamentals that are coming out this week. So we are expecting that there's going to be great movement, but a lot of volatility as well in the markets. So make sure you guys are trading safe, and I will see you guys for the next weekly outlook.